Good morning, everyone, and welcome to Tuesday morning. It's Stephen Whiteside here from the uptrend.com. In the pre-market this morning, things are very quiet out there ahead of the CPI numbers coming out at 8:30 this morning. Those numbers could certainly rattle the market and maybe change Fed policy. We'll just have to wait and see. Now, the fear index or the VIX is still on a sell signal. Yesterday was a quiet day, inside day for the VIX. Things would change on Tuesday with a close above 1776. Now, looking at the bond market, there's the TLT and the XBB both on buy signals right now. And so rising bond prices is usually negative for bond yields, and that is supportive for higher stock prices. Emerging market bonds have been moving up nicely over the past month or so, while junk bonds have been treading water over the past month. And so waiting for some catalyst to take us higher. Now, I watch the bond market as it relates to the stock market, but I'm never trading any of these bond ETFs. For that junk bond ETF we just looked at, the average true range is 0.25%. So that is definitely watching paint dry, trying to make money in that particular market with the type of leverage that you and I have as individual investors. Compare that volatility to a stock like Apple, which is currently at 2.45%. So you're looking at basically a tenfold increase in volatility just moving from the bond market to the stock market. Now, there is a way to make money in the bond market. That's trading the futures contracts, in which individual investors can have a lot more leverage than they can have in the stock market. So there's the 30-year bond currently on a buy signal. And of course, the yield on the 30-year bond is on a sell signal. And for the stock market to continue to move higher, we would want to see bonds continue to move up. We're putting downward pressure on bond yields, and that could be supportive for higher stock prices. Looking at currencies, the US dollar index is on a short-term sell signal right now, but notice, we're making higher lows and higher highs at the moment, and compare that to the euro, which has put in a lower high, another lower high, a lower low, and another lower low. So we're looking at a bullish pattern for the US dollar index and a bearish pattern for most currencies, including the Canadian dollar and the Japanese yen, all making lower highs and lower lows over the past couple of months. Looking at the world of commodities and looking at the metals, we had gold down sharply yesterday, down over $86, bouncing off the lower channel line. There was the GLD down yesterday. It traded below the lower channel line, but did not close below it. Now that looks very bearish, but at the same time, gold stocks held up much better than I expected. There's the GDX. It certainly had a nice intraday low. You can see where it opened down here and then recovered nicely going into the close, closing down just a little on the day. So that's the GDX. There's the junior gold miners, and there's the XGD. They all did basically the same thing, recovered most of the losses as if gold did not drop $86 yesterday. Now, the price of silver was down. There's the futures contract. There's the SLV. In both cases, we did not generate a sell signal. And then, just like the gold market, silver stocks, whether the big caps or the juniors, had a pretty good day recovering. Um, in the case of the silver miners, just a tiny loss on the day, down 1.1%, whereas the junior silver miners actually closed slightly higher on the day. So, not what I was expecting given the what the metal was doing in the pre-market. Last up, cannabis stocks popped yesterday on rumors that the White House might do something about cannabis laws in the U.S. There's the ETF on the TSX. There's the ETF in New York, up over 27% on the day. And all the major marijuana stocks popped yesterday. There's Aurora, there's Tilray, there's Canopy Growth. Now, these stocks are some of the most volatile stocks that we follow. The average true range on uh, Canopy Growth is actually 7.44% at the moment, and it's just starting to break out above the flypaper channel. So these stocks are extremely volatile, and they've been crushed over the last couple of years. So, if you want to play in this market, just remember what you're playing with. Let's say that weed stocks are the natural gas of agricultural sector. So, yep, they're moving up on rumors, and who knows how long that is going to last. But a lot of people are still watching them. A lot of people still trading them, and they often come up at the top of the most active list on the TSX. Okay, folks, that is all for this morning's presentation. Next time you'll hear my voices on Wednesday morning, and at that time we'll take a closer look at technology stocks.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.